Good afternoon, this is Tom Asper with the Viper Report. It's Wednesday, October 16th. In today's video, I'd like to take a look at some of the technical indicators that I follow and how they are worked into a viable trading plan. In order to be a successful investor or trader, it is my belief that you need not only to have the right tools, but also to have the patience and the discipline to develop a plan that's based on potential profit as well as risk. Last time I talked about the sentiment indicators. This chart from Stock Chart shows that the bullish percentage down at 20.3 last week, it's bound to go up this week, probably, maybe 25 or so. And you can see the bearish was also pretty high at 44. This is an indicator that I follow regularly, but I always tell my students that you need to combine this with the AD line analysis before you act. Back in last December, it made a significant low early in the month and then bottomed out, even though prices still continued to fall until the December 24th low. The bearish percentage peaked out more coincident with the price action. This is one of several sentiment measures I use to gauge the state of the market. This chart is from a great free website, Index Indicators. You can see up here. Has a number of different studies. This is one I follow pretty closely. The black line is the S&P 500. The red line is a 5-day moving average of the percentage of stocks above or below their 50-day moving average. On the chart, you can see this dashed line. That's the mean. Okay, so this is one standard deviation above the mean, one standard deviation below the mean. These readings, like the sentiment, need to be compared with the AD analysis to pick a market turn. There have been a number of them. You can see both got very low in December, and the AD lines turned positive right at the start of January, with the weekly AD lines turning positive by mid-January, and they've been positive ever since. You can see as of yesterday's close, they were 53% on the moving average basis of S&P stocks above their 50-day moving average. One would expect this to move up to the 75 to 80 range during this market rally. So right in here, there's still some pretty good upside potential for the overall market. You can see earlier in the year, it peaked out in March, and then as the market was forming a short-term top at the end of April, it was already declining. Of course, one of the keys to my analysis is the AD lines. This shows you a current chart showing you that the NYSE All AD line broke out last week. They all turned positive last Thursday, catching this rally nicely. And this is the stocks only, also shows a bullish zigzag pattern. They could typically pull back to their moving averages here, and you can see the prices are also well above their 20-day EMA. I've written trading lessons of both of these techniques, which new subscribers often find interesting. Today's action has been a little sloppy, been up and down all day. S&P is currently down about 5 points with 15 minutes of trading left. You can see the market internals are pretty much even. New highs, new lows. The new highs have finally started to pick up a little bit today. That's a good sign. That's been one of the things that's missing, and was one of the reasons I was cautious in the middle of September. In the next video, I'll take a more detailed look at the high-low analysis. If you're interested in trying to understand market corrections, if you go to viperreport.com, there's an article called The Survivor's Guide to Market Corrections. That's what I teach in my AD line course, amongst other things. You can see it reviews quite a few market corrections going back through the bull market. 2018, this was from also 2018. And in 2016, at the February low, this is a very important bottom. You can see we had a bullish divergence here in the AD line. It's my view that if you understand the AD line and follow it day by day, week by week, and month by month, you can significantly improve your performance in the market. We made several new recommendations in both stocks and ETFs this week and are continuing to fine-tune our entry levels so we can get a price where the risk is well controlled. If you're interested in ETFs, you can look at the ETF report at viperreport.com. Sign up. You'll start to get reports immediately. That includes the ones tomorrow morning. Viper Hot Stocks, we track primarily the NASDAQ 100 and IBD 50 stocks in that report. Also, if you want someone to help you in your trading, I do a limited amount of mentoring and training in my Advanced Decline Line course. This article will tell you more about what that entails. And if you're interested, you can email us and we'll provide you with more details. If you want to know in advance when the next email will be sent out or the next video or Forbes.com article will be released, if you click on this link here, it'll give you a copy of my trading lesson book and sign you up to the Viper Report free email list. And we'll keep you appraised of all the videos as well as the free classes. Hope you have a great rest of the week. Should be interesting after the close with both Netflix and IBM reporting earnings.